JD.com reported quarter 3 earnings. They beat on revenue, they beat on earnings per share, and the stock immediately drops 5%. How does that make sense? What's worse, if you zoom out, JD's stock is down 12% this year, while its peers like Alibaba and PDD are up. What is the market seeing that the headlines are missing? This is a classic trap for investors. On the surface, the report looks good, but the real story, the truth behind this stock drop isn't in the revenue number. In this video, we are going to find that truth. We'll tear down this earnings report, look past the PR, and find the real reason JD.com is struggling. We'll cover the fundamentals, its valuation, and answer the big question. Is this a value trap or the best buying opportunity in China? Don't forget to subscribe, you won't want to miss this. Starting with JD's third quarter 2025 results, first highlight net revenues. $42 billion for the third quarter of 2025, an increase of 14.9% when compared to third quarter of 2024. This is huge growth. I was not expecting that. This is very good. Of course, it's not organic growth from the core business from JD. Nevertheless, very good growth. In terms of net income, 5.3 billion renminbi, which is around $0.7 billion. When you compare to the previous year, it was lower, almost half. In the previous year, we had 11.7, so profitability coming down, which is not a good sign, but they are doing plenty of investment, and that's the reason. Probably this is one of the reasons why the stock is down, because they are investing a lot. Investing, it's not bad, but if you are investing something that will not yield high returns in the future, or if you believe in that, you basically are wasting money, and investors don't like that. In terms of the JD retail, net revenues of 35.2, so an increase of 11.4. This is organic growth in the JD retail core business. So even though they have been growing 15% because of other new ventures, their core business grew revenues around 11%, which is very good. This is good news for China economy. So this is a good sign for Baba in the next earnings report, that we expect their core business to grow above 10%. So this is good news for Chinese investors overall. So from the Sandy Xu, CEO of JD, in the third quarter we continue to see strong growth in both user base and shopping frequency, so volume, and the number of our annual active customers surpassed the new miles of 700 million in October. Bear in mind, population in the United States is what, 400 million, so they have more users, a lot of users, and JD is probably one of the biggest companies on China. Our core JD retail has built a growth matrix where multiple drivers complement each other. We are confident to further solidify our leading market position in electronics and home appliance despite the high trading base, and unlock vast growth potential in the general merchandise category and advertising service. It's good to see that the core business of JD has growth potential without not new ventures, I would say. So seeing good growth in the JD core business will be what will deliver growth and high return for investors. The lever continued to scale up and generate deeper synergies with JD retail. Yes, good news. It also achieved sequential investment reduction in quarter 3 thanks to its improved unit economics performance. Overall, we have seen healthy progress across our business line and believe they will work in synergy to unlock the full potential and broader business ecosystem. My thesis to invest in JD is because I like their core business, not because they are investing in this new food delivery business. This is a low margin business, but they have a wide moat and plenty of competitive advantage. One of the best delivery business, their logistics is very good, and they are a brand that is trusted by Chinese consumers. So That's what I see valuable in JD. So I'm loving to see that they have potential to growth in this core business, and I'm a happy shareholder with that. So revenues increasing 14.9, good momentum across business line. Chinese economy showing signs of growth, which is very good. Another very important update: share repurchase program. JD looks very cheap. We'll look next into it. So if it's really cheap, if they trust, they will be buying back shares. So I want to hear if they are doing buybacks. So company share repurchase program up to 5 billion, adopted in August 24 and effective up until August 2027. They approximately bought 80.9 million, which is like 1.5 billion dollars from this $5 billion repurchase program they have. So they have still 3.5 billion. Up until 30 of September, they bought approximately 2.8%, which is a very good buyback, almost 1% per quarter. So good news, they are doing the buyback, they are doing paying a dividend, so they are distributing cash they have in excess to the shareholders. So very good. I like to see, and that's one of the reasons I'm investing in JD as well, because I believe in their core business, because it's cheap, because it's a good business, very stable, and they are distributing cash to the shareholders. So very good news. I really like this earnings report. The reason I really like JD is a very strong fundamental company. So if you look, for example, revenues going steadily, this is very stable, even though they have lower margins and their profitability varies a lot. Their revenues have been going steadily in the past like 7-8 years. There was not a single year that we didn't see growth in their revenues, and that's a very good side of the strength of their business. Gross margins improving, even though free cash flow margins still varies. But when you look into free cash flow per share, they have been growing. They have the outlier in 2020, but nevertheless they've been growing free cash flow almost at a rate of 24% per year, which is very good. And with these buybacks, revenue still growing, doing a lot of buybacks, this free cash flow per share, I'm expecting them to continue to grow. And free cash flow per share, it's what creates value for the shareholder. Shares outstanding going down and returns above 10%, which is always a good sign. From our money journey checklist, growth, yes. Their revenues are very sticky and growing each and every year, so I would say it's very good and stable business. They have plenty of competitive advantage. I would say this almost is recession resistance, recession proof, because Chinese economy was in a recession and they grew revenues every single year. So margins, of course, are not high. I would prefer high margin business, but this is their competitive advantage and why it's very difficult to compete with JD. But that's Costco, Walmart has lower margins as well and are one of the best companies in the US, and I believe JD is the same in China. So that they have plenty of cash in hand. They have 27, almost 28 billion dollars, and enterprise value is only 32 billion dollars. So they are trading at a market cap of 40 billion dollars. So 2/3 of the company is cash, and you are buying the rest, the business that is very profitable, and I am expecting them to do plenty of buybacks because this valuation looks very compelling. Management is very good, one of the best, and their free cash flow has been growing almost 25% per year, which is very good. So it's a very good company, very cheap. When you look to the price, our fair value is around $66. Right now it's showing around $30. So it looks incredible cheap. One of the best opportunities, we find that on our watch list. So to wrap it all up, the paradox of JD.com is simple. The market isn't looking at the headline beat. It's looking at the collapse in profitability and the massive cash burn from its new business like food delivery. The core JD retail business, it's actually doing fine. It's profitable and growing double digits, but it's being overshadowed by a costly price war that is dragging the entire company's fundamentals down. This is what leaves us with a stock that looks cheap, but is cheap for a reason. The big question for you is, do you believe these new investments will pay off and create new growth engine? Or is JD lighting billions of dollars on fire in a battle it can't win? That is the entire investment thesis in a nutshell. What do you think? Let me know in the comments below. Is JD stock a buy or a sell right now? And if you got value from this breakdown, please hit that like button and subscribe. Thanks for watching. This video is for informational purpose only and should not be considered financial advice. Always conduct your own research and consult with a qualified financial advice before making any investment decision.